So this one right here is one of my favorite ones. How do you get started as a real estate investor if you don't have a lot of money and you want to buy a multifamily property? The answer is government-backed loan programs, specifically FHA. That's the one everybody knows. 3.5% down, you can buy a 3 or 4 unit building, get some cash flow, live there, okay? Now there's some things you got to know about those, right? So let's get into it. 6 of them. Number one, they drive the market, okay? The highest percentage of 3 to 4 unit buyers in Fall River use these loans, and let me tell you, they bid prices up, okay? It's just what it is. So, it drives the market. You tend to overpay a little bit, but you're in at 3.5% down, okay? Number two, like we said, allows a lot more people to become homeowners and investors. That's the key, all right? You can live in the apartment and rent it out for $2,000 a month, or you save up some money, put your 3.5% down, we work out a deal, and maybe it's costing you $800 a month to live there, okay? But when you move out one day, you got that delta to make up. And I'm gonna get into a strategy. The last one's a great strategy and why now is the time to do it. All right, number three, we're in a high rate environment. So it is a little tougher to close these loans because FHA has this really weird thing called a sustainability clause. So basically the mortgage payment has to be 75% or less of the rents coming in. So when the rates were 3% and the rents were increasing quickly like they are in Fall River, it worked great, right? You had enough cash flow to cover the note. Now the rates have more than doubled and the rents have not more than doubled. So it totally changes the mortgage payment, and the rents have not grown as fast. So they're a little tougher to do. We've linked on our site here. There's the HUD Fair Market Rent website. I think it's a great resource. Gives you rents all over the country. Studios to 4 bedrooms, and you'll see. And that's kind of what we use when we're pricing out these houses. All right. Number 4 with these loans, the property has to have certain safety things in place, which makes it a little more challenging because some of these houses are over 100 years old. Common issues: peeling paint, GFI outlets, kitchens and baths, handrails, believe it or not. Those are just common things. Most of it we can tackle, but for a real rehab building, a normal FHA doesn't work. But, number 5, there is a way. It's called the 203K, which is a rehab loan through FHA. Again, kind of complicated. I think right now, those offers will probably get, some looks, right? A year, 2 years ago, when the rates were 3%, nobody wanted to deal with the FHA 203K. It's just the reality of it. It's a difficult property. It's a difficult transaction to close. But we know how to do them. We can get them done. We got the team to do it. Don't worry. All right, and number 6, the most important one, and this is the strategy right now, taking all that into consideration, here's the strategy, all right? Listen, the reality is it's not going to be a big cash flow property up front, okay? But you're getting in the door with very little money, okay? But the strategy is if you can make it work with the high rate, with the rent thing we talked about, if you can make all that work, and we know how to do it, we plug it in to a spreadsheet that we have, 2 seconds, I'll be able to tell you. All right, if you can make that work, just hang in there. Because as soon as the rates go back down, there's so much money on the sidelines, you will see the mad dash in and the buildings will appreciate quicker. So think about it like this. You pay $400 for a building now, okay? Maybe I have somebody I know. We got him a building, a 3-family for $400,000, okay? He bought it pretty good, a little bit below market. We got the deal done. He did an FHA loan, 3.5% down. He's living there, so he's taking advantage of the whole thing. I would say give it 2 years, let the rates come back down, easily will appraise for $500,000. I think he's already halfway there as it is because he bought it really well. Easily appraisal at $500,000. Now he's got 20% equity in the building because he only owes 4 on it. It's worth 5. We can refi that, totally drop that payment down, and now it's cash flowing an extra $1,000 a month, according to our projections. So you see how that works? So we have a way. We're going to take advantage of this situation here. Less craziness, less people in the market. We'll have a little more negotiating power on the buyer side. All right, but that's the advantage to these FHA loans and these government-backed loans when you're buying multifamily properties. But there's so many nuances. You need a team like us that understands how to navigate that and find you the advantage. All right, so if that's something you're looking to do and you want to find out how you can be a real estate investor with little as money down as possible, let's connect. The info's below. Let's talk, and I will help you get there. All right. Thanks.